Hey, what's up, Crypto Daily fans? I'm Brian Wilson, and today I sit down with Simon Dixon. Simon is the CEO and co-founder of online investment platform BnkToTheFuture.com, who have invested over $630 million in fintech companies. An ex-investment banker turned Bitcoiner and author of the book Bank to the Future, he is an active fintech, blockchain, and Bitcoin angel investor with investments in Bitfinex, BitPay, Shapeshift, Kraken, Bitstamp, Uphold, and over 100 others. You will find Simon regularly quoted and appearing in much of the major press and media, including BBC, FT, CNBC, Reuters, Bloomberg, and Wall Street Journal, just to name a few. Simon is also one of the speakers at the upcoming event Crypto Poco, which is part of Poco in Acapulco, Mexico, 14 to 17 February next month. It is an incredible event with a superstar lineup of speakers and attendees. I will be attending that event and covering it for Crypto Daily, and I will be going and doing interviews with speakers from that event in the coming days and weeks to give you some insight into what will be going on there, sort of a prequel to the Crypto Poco / Poco event. Today is the fourth of those interviews, and I feel lucky it is with Simon Dixon. Simon, I have been following your work for some time, and I love that you have the right idea, well, at least align with my idea about how banking should work. I'm really excited to talk with you about all of that in this interview. Thank you so much for being with us today.
Okay, well, thanks for having me. It's an interesting space, the crypto space, because everybody comes at a different level and for a different reason. But I do remember way back when I first got involved, it was people that are really looking to make change in the banking system. Now, more recently, there's been a lot of finance people and bankers or people that came in at the ICO level or very different things. And so it's a mixed bunch of people, but I do remember the original people were here for a mission, and that was to create an alternative to the traditional financial system. And it was a bunch of anarchists and crypto technology geeks.
Yeah, absolutely. I remember when I first got involved and the kind of sentiment, the way things were at that moment, and things changed quite rapidly in this industry. I've seen some pretty big growth just following, what you guys are doing. You're quite well known, not only in crypto, but also in banking and even to a degree, a bit of politics, probably because of the other two. But just for any of our audience who might not know, kind of who you are or what you do just yet, could you kind of open it up and just give us a bit of, your background and kind of how you dove into cryptocurrencies?
Sure, yeah. So I'm a finance guy that got driven into technology as opposed to the other way around. You get many people that are technology people driven into finance as a result of crypto. But really, for me, it all started when I did masters in economics, and I disagreed with a lot of what I was taught in economics. I found it remarkable that our entire economy is being run upon economic theories and academic principles that have never been proven and everybody disagrees on. At the highest level, it's being run, with these theories, and they've grown out of control, where we're running our entire monetary systems upon things that have never been resolved or thought of as fact yet. But that drove me into an investment banking, and I did several years in corporate finance, sending companies public on the London Stock Exchange, and also as a trader and market maker, where I was making a market, or you could call it manipulating markets on the London Stock Exchange as well. But in 2006, I decided to throw in the corporate towel and dedicate myself to giving talks on how money works and the troubles in banking. The problem was in 2006, nobody cared, but around about 2007, 2008, everybody cared. So my talks went from a few people not being interested to hundreds of people in a room being really interested in finding out how money actually works. So I wrote this book, Bank to the Future, and Bank to the Future was actually talking about how fintech companies are going to change each area of banking and finance. And it also was the first published book in the world that covered Bitcoin, because prior to actually starting on the book, I was invited to speak at the very first Bitcoin conference in the world. It was held in Prague, and it could only be described as being held in a crack den with about 40 anarchists and computer geeks discussing Bitcoin. And really, at that time, it was very uncertain whether Bitcoin would succeed, but the ideas were really, really interesting and intriguing to me, because it covered many of the challenges that I was discussing with banking at the time. I was also setting up a company which I started and co-founded with Dixon in 2010 around allowing people to invest online, which later became the popular word equity crowdfunding. But at the time, we were just looking at doing VC investing online in private companies. At the same time, kind of all these different things came together where the financial crisis hit, Bitcoin started to become a thing, and we started to receive the relevant regulations that we needed for online investing. So because Bitcoin investments did incredibly well, we no longer needed VC funding for the business. And we decided to just combine all these things and integrate it into one mission to fund the future of finance. And that was, we were doing funding rounds for many of the very early companies in Bitcoin, some of the original exchanges like Kraken and Bitstamp and Bitfinex and many other companies that you mentioned, and Shapeshift and others. Really, that was a very niche thing until around about 2017 when the market really started to explode. And then we have the correction market in 2018, and that brings us to today where the entire world has now at least heard of Bitcoin. They may think it's a scam, a Ponzi scheme, or a currency just for drug dealers, but everywhere I go in every corner of the universe, no matter how obscure it is, I meet people that have actually heard of Bitcoin. And so I like to try and change their perception and their understanding of what it actually means for the world and the true innovation that's going to come in the years and decades ahead.
Yeah, absolutely. I live in Japan, and so, things, they have advanced here a little bit further as far as merchant adoption and things like that of cryptocurrencies. So nobody in Japan that I talk to actually believes that it's a scam, fortunately. But some of my friends back in the United States maybe feel that way, or have seen comments online. And I think it just comes down to education. When you can show that, this industry is being taken seriously, and it's basically spread throughout all of the world so far. Like you said, everybody's at least heard of it, and it's really having an impact in places like third world countries and places like Venezuela with their problems in economics at the moment, and places like Zimbabwe, things like that. But I was wondering, since this is an interview kind of, leading into Crypto Poco, could you kind of give us some insight into what you will be covering at Crypto Poco next month in Mexico?
Yeah, sure. I should say at this stage, it's somewhat questionable whether I'll be able to make it this year. I was really enjoyed myself last year where I gave my first talk for Crypto Poco. When attending Crypto Poco was literally like attending that very first Bitcoin conference, because the types of people it attracted were really the type of people that were really around Bitcoin in the very early days. But the only difference was you could magnify the number of people by 1,000 because there was just thousands of people everywhere. But it really brought me back because, as I said in the beginning, the crypto markets have changed a lot. But an Poco and Crypto Poco, it really did remind me of how it was like in the early days, just with a lot more people. So it is I'm upset that I can't make it, but for personal reasons, I think it's questionable whether I'll be able to make it this year. But I'll definitely be looking to do that next year. I think it will be a great conference as it was last year.
Oh, well, that's unfortunate that you can't make it, but it's good that you had some insight about last year and how incredible it was. I'll be going this year for the first time. I was supposed to go last year. I actually had tickets and all, but something for me personal came up last year. So this year I'll definitely be making my first one, and you got me even more excited to go now. About speaking, kind of about, the way things were in the beginning. I've heard you say before that something happened that made you kind of fed up with what was going on. And so, I kind of want to ask, what was the catalyst that shot you in your current trajectory? And by that, I mean, what was the thing that happened that really made you shift gears from what you were doing in banking and finance and led you to create Bank to the Future?
Yeah, I mean, really, it was just people's lack of understanding of how money works. So, I was entrenched. I was working in corporate finance. I was working in market making. And what I observed in banking is that people are specialists in their own little area. And there's so many different cogs in the wheel of banking. And the amount of time you have to work is, I used to do 100 hours a week in corporate finance. And so you've got zero time to actually invest in learning anything other than what you're trying to do in that little cog. And very few people have an appreciation and understanding of the macro picture. And then at that time, when I was really looking into, re-educating myself on monetary policy from what I learned in economics, because I was originally taught first in year one economics, you're taught that a bank is an intermediary between a borrower and lender, which isn't actually true because there's no savings behind the loan. So then when you do year 2 and 3 economics, you're taught that there's this thing called a multiplier effect. And a multiplier effect means that the bank has a base of deposits, and then the bank is able to multiply those deposits. And in the US, they call that fractional reserve banking. The problem is that there is no reserve and there is no fraction, because banks can use the investment banking division and the fund management division to actually leverage those deposits many times over. And therefore, there is actually zero requirement on reserves. And over time, that's changed anyway, because it's no longer cash. You can hold it in bonds, and those bonds were created through this system. And so what I realized is that actually we're just sat on this just ginormous heap of crap called debt. And the entire monetary system relies upon individuals, governments, and corporations taking on ever increasing levels of debt in order to have an economy. So when I started really digging deep into that, I remember when I told people that banks create money every time you issue a loan. At the time, that was considered a complete conspiracy theory and wacky thinking, and people would defend and deny it till the end. But it wasn't until Bitcoin came around that people actually started to see the difference. And so my mission really became educating people on the difference between money and Bitcoin. And I tried to put things in as simple terms as possible. Finance is really geeky. Technology is really geeky. Couple finance and technology, and you have things that most people can't comprehend. And the language and is too intimidating and strange. So very simply, my very first talk was talking about 3 differences between understanding the money that you hold at a bank and Bitcoin. And the first is that when you deposit your money at the bank is now the legal owner of that money. And most people don't experience the challenges of having the bank as the legal owner of their money. But as anti-money laundering laws become more and more prevalent, people start to experience, if you hold, you try and transfer more than $10,000, you soon realize you have to ask the bank for permission to move that money. And then when you're in a country like
this, I went to do a transfer from one of my bank accounts which is a U.S. account, over to my Japanese account because I live in Japan, and it was in excess of $10,000. My U.S. account got shut down, and it took me 3 days to get it turned back on, and I was transferring my own money to myself. So it does actually happen, and it's extremely frustrating to be in a situation like that. And I don't know if anybody who's listening has experienced that, but it's real.
Oh yeah, I mean, and most people don't experience it on a day-to-day level, so that doesn't become real until they have an experience like that. Then you realize you're in a position where you're trying to tell the bank what you're doing with the money so they can give you permission to move it. And you realize it's not yours at that point. You're just begging the bank for permission to use your money. And, there's a few more case studies on that. If you're in India and you held cash, you suddenly realize the government can just make cash illegal. And then all of a sudden you're trying to take your life savings in a bag, queue outside a bank, risk getting your life savings stolen, mugged in a country, where you're standing outside a bank. And then the bank running out of different notes and you having to flush it through the banking system, digitize the money so that then they can control it more. And the war on cash is going to be a global thing, and you start to realize you don't own your money when you start to do things like this. Another example which we all can relate to is if you travel abroad and you forget to tell your bank that you're about to go to Mexico to attend the Acapulco conference, then suddenly you'll find yourself in a scenario where you're trying to call your bank, explain to them that you are actually in Mexico. It is you, and it's not fraud. And so that they can then, and you're buying yourself a local SIM card so you can call them, because the international call is, and you're in this position where you're just trying to use your card. And because of the way the system works, you realize the bank is actually stopping you using that money, and for valid reasons, because it's fraud protection. But then it's an example of you realizing it's not your money.
Yeah.
And
People
so
in Greece
really,
also realize that real fast, in Greece, when they, basically stopped everybody from being able to pull money out of the ATM. I mean, could you imagine if you went to your ATM and you had plenty of money in your account and you wanted to withdraw some money, bills are due, or you need to go get some cash for something or go to a dinner or whatever, and you get denied, you get rejected at your ATM, and then your government tells you, sorry, we as the government are now stopping you from being able to withdraw, money from your ATM, or we're going to tell you exactly how much you can withdraw on a daily basis.
Exactly that. And then you've got more extreme examples like Cyprus, where the bank got in trouble, and so they just take your deposits and recapitalize the bank. And so it's not until you see all these examples in real life hit you in your everyday life that you start to actually discover the need to own your own money. And Bitcoin became the first way, since cash, that allowed you to own your own money, but the very first way to do it in a digital environment where you could do the second thing, which is, with your bank, you don't own the money. With Bitcoin, you can own your own money. The second thing is that when you don't own your own money, you can't spend it as you wish. And if you try to send it to WikiLeaks or support something that the government doesn't necessarily agree with, or that the bank considers too high risk, like, legalized cannabis or something like that, then you realize you can't spend it how you want, or you try and spend it in a country which the US has decided is a sanctioned country, and you're not allowed to spend your money there. And so really you realize that when you don't own your money, the bank can control how you spend it. And with Bitcoin, it's essentially, because it's your money, you're able to transact in a peer-to-peer fashion and spend it as you choose. And really those two things are the two things. Now, the third one's a little bit more complex for people to understand, but in simple terms, because banks have been essentially given by governments, the governments have outsourced the money creation process to the private banking sector. And therefore, all money is essentially, it can only be created by a bank when they take on debt. So when people talk about a digital currency and they think about Bitcoin, I tell them Bitcoin did not invent digital currency. Bitcoin invented digital currency that you can own and spend. The banks invented digital currency because the government allowed them to create a digital representation of the money that you thought the government was creating. And so if you log into your online banking, you think that might be backed by pounds or gold or something, depending on how knowledgeable you've got into this. But really, it's just a digital currency. It's a digital version of the government's fiat currency. The government creates notes and cash, and the banks create the money in your online banking.
Yeah, I think I've seen somewhere where there's something like 97% of the world's currency supply is just digital ones and zeros in a bank, and does not have a physical representation. Only 2 to 3% of all currency has a physical representation in the world.
Absolutely. I mean, 2 to 3% is cash and coins. 97% is digital currency. And that digital currency is, the way it comes into existence is it's all created as a loan. So every single time somebody takes on a mortgage, or a company borrows money, or a government borrows money, this new digital currency is created and the money supply increases. What it means is that in order to have money in our economy, you have to have debt. And therefore, the entire monetary system is based upon how much money governments, individuals, and corporations are willing to borrow. And so therefore, the sensible thing in such a monetary system is, because the money supply goes up the more that is borrowed, and the economy grows the more that is borrowed, is for you to take on as much debt as possible, because the money you repay is going to be worth less in the future because of this effect. So essentially, the traditional financial system means that the sensible strategy is to borrow as much as possible, and it encourages everybody, it rewards the person that takes on debt. The saver gets these really bad interest rates, or they get their bank deposits confiscated or bailed in or whatever it happens. And so it doesn't encourage saving. And therefore the sensible strategy is debt. Now, Bitcoin's the exact opposite, because what it did is it created a monetary system that essentially had a fixed supply. And that fixed supply means that it can never be changed, and it's enforced by math and codes by hundreds of thousands of people running the network around the world, and no single person can change that money supply. And therefore, you create a system whereby if Bitcoin becomes more and more useful to more and more people, which I believe it will, which is the speculative part of that, will it become more useful to more people? I believe it will. Then the only way that you can increase the circulating supply, because you can't increase the number of them, is you have to increase the price. And therefore, if it's a long term, more and more people want Bitcoin because they want to own their own money, they want to spend their own money, then it rewards the person saving rather than the person taking on debt. If you take on a loan in cryptocurrency, then it's far too risky because these prices can really move. So essentially, it rewards the saver rather than the debtor, and the monetary system is fixed. And therefore, we have, for the first time in history, the first opportunity, I believe, to create a 100% fixed supply, sound monetary system, and our world's best shot at ever achieving sound money. Now, that was a ridiculous proposition when I first went to that Bitcoin conference, but each year it's become more and more realistic that this could actually become something that has a currency that has no political tie, no country agenda, and is completely neutral and global, and allows you to own your own money, spend your own money. That is a terrifying proposition for regulators, for governments, for tax officials, and therefore their sole effect at this point, because they can't shut it down, they can no longer laugh at it. It's to try and get as much regulatory capture as possible so that they can recreate banking, but with this apolitical digital currency at the center of it.
Absolutely. I kind of wanted to just take a step back real quick to some things you were talking about debt and how, the creation of money is really based on the creation of debt. I was curious, have you seen Mike Maloney's Hidden Secrets of Money, episode 4, that explains this?
I remember watching this. I think he's a speaker at an Poco. I remember watching it many, many years ago, but I wouldn't know the specifics of each episode.
I just want to, kind of let people know. I just want to kind of let people know if you really want to learn more about what Simon's talking about when it comes to debt and debt creation. There's a really good series called Hidden Secrets of Money by Mike Maloney, and if you focus on episode 4, it really easily explains why that this system is wrong. The fractional reserve system is wrong. Why it's messed up. And why the creation of money is tied to the creation of debt. So good series to watch on that. And then really that kind of the second part of what you were saying, where I truly believe, I believed, kind of what you're talking about the fixed supply of Bitcoin. But then things came along like Bitcoin Cash, and now Bitcoin Cash ABC and Bitcoin Cash SV, and there's these splits that happened. I kind of want to get your take on that, because you're talking about it being this fixed supply. And does that grow the supply? Is it now 42 million and 63 million, or what do you feel about that?
Well, that's why I was so opposed to the split when it was happening in real time. But it became apparent that because of people's differences about what Bitcoin is to different people and how it should grow, it became apparent that split in the community was a really important decision. And in fact, no one really controls that decision. It's inevitable. This is all market forces. But the most important thing to me was that Bitcoin is not Bitcoin Cash. Because if Bitcoin is Bitcoin Cash, which for those of you that don't know the history, there was a massive argument over a period of about 3 years where different players in the ecosystem were arguing about how to scale Bitcoin so it could do more transactions per second and compete with something like Visa and MasterCard. Because, a blockchain is an expensive, clunky, decentralized network. And it's quite expensive, clunky technology compared to a centralized database where you can just move numbers at will with no one, no energy behind that or anything. I don't want to go too geeky into it. But the debate was a really, really geeky debate, and it was a technical and both an economic. And many people, because Bitcoin is a decentralized network where the developers are independent of the miners and the miners are verifying and the businesses are independent of the developers and miners, and then the users have a different opinion. Because Bitcoin is the closest thing we've got to a decentralized network where you had this split whereby, for example, there was something where the businesses all colluded because they wanted the code of Bitcoin changed. And so therefore they had a group of businesses would have a big argument with the developers. And because they couldn't get their own way, it led to a new coin being created. Or a group of miners had an opinion about where it was and they couldn't agree with the developers. And therefore a new coin was created and it goes off into two things. So to me, if these forks are meant to be Bitcoin, which they're not, and it's quite clear about that, how people refer to it and how people are using it, then you have a complete breakdown of the fixed money supply, and which essentially would be the end of the experiment for me. If you could just at will change the money supply of Bitcoin from 24 million to 42 million, then everything I've been telling people over the years is just simply not the case. Fortunately, that did not happen. And what did happen instead is that people can create their own chains, their own versions, their own things, and they can compete in a market force. But in my perspective, from my opinion, I think no matter how much your technical improvement is, you might be able to create a network that performs a different function. It might function as cash. It might function as disruption in the IPO markets like Ethereum. It might function as supporting merchant adoption as Bitcoin Cash is looking to do. It might function as disrupting Ethereum as EOS is looking to do, and you can get more and more complicated the further down you go. But in my perspective, there's only one network where the miners, the developers, the creators, the media, the businesses, and the users are sufficiently enough independent to make it apolitical where changes are hard. And there's only one network that does that, and that's Bitcoin still. And that's why, in my opinion, Bitcoin is our world's best shot at achieving sound money. And anything else might solve a different user case. But unfortunately, I believe that the others are controlled by significant controllers that own a lot of the ecosystem. So if you look at something like Bitcoin Cash, what I really like about Bitcoin Cash is its focus on merchant adoption and trying to bring money to the world and the vision behind it. But if you look behind Bitcoin Cash, its weakness compared to Bitcoin, while it might have more technological innovation and allow for faster transactions, is that it's significantly more controlled by a few people, where the miners, the developers, the media, and the people pushing and promoting and creating are pretty much, the same similar people that aren't working at force that logs against each other. And therefore, if you want to shut it, if you want to take significant control, then there's a few people you need to co-opt in order to do that. And therefore, it's not as apolitical as Bitcoin can be. And, and there's a lot of politics behind that, which I really don't want to get in, because I believe at some point, the crypto industry really lost track and started infighting and arguing with each other more than they did about promoting new adoption and getting more people into it. And my hope is that in the future, because the communities have now split, we can just focus on adoption of the thing that we're looking to bring to the world. And we can really get, more united. I don't think it will go. It's just a natural thing as our community grows, that vested interests take over. But I think as an industry, we need to focus more on helping people understand crypto, use crypto, and rather than infighting and making crypto look bad by insulting each other and our different philosophies.
Yeah, I agree with you. The infighting is ridiculous. The warring, the talking bad about other groups and everything. If you have innovative ideas, explore those ideas, build great creative things, and make it useful for people to use, and don't worry about what everybody else is doing. Is kind of my feeling on it. And I'll tell you, my idea of the way things are going to unite is the next financial crisis. When things really, drop, you see what you saw in 2008 or even worse in the future. That's going to unite everybody back behind one idea about cryptocurrencies and about sound monetary policy, and how Bitcoin can, be useful and help you protect your wealth, and the value that you've, worked so hard to achieve over time. So that's kind of my thought on that. What would you say to someone that asked you about the importance of a new way of banking and finance, and what advice would you give them?
Well, I think the importance of it is choice right now. So when I think about Bitcoin, I don't think about, it would be great to achieve this where we have hyper Bitcoinization and Bitcoin becomes a medium of exchange, a store of value and a unit of account, and the entire world adopts this one global currency that is independent of politics, and keeps countries honest because they don't own it or control it and can't print it at will. I'd love for that world to exist. I'm a little bit more skeptical about whether it will exist. So I believe that we're going to be in a world that coexists where people have choice. And that's the important thing for me. If your bank takes unnecessary risk with your money, and you understand that the money at your bank is subject to a bail-in, is subject to these things, and they might, because it's a centralized database, they might be able to fill certain user cases of allowing you to use Visa or MasterCard very, fast for non-controversial transactions, or, solve in a way where you need stable money in order to pay your rent every month. But I think that's also going to be challenged with things like stable coins, where it's a crypto version of the fiat, and then a fintech company can then compete with a bank. And then you've got the full volatility, crazy world of Bitcoin, where you can opt out of the financial system altogether. And I think it's really important to have these choices. So with Bitcoin, for me, it's kind of like, for me, I see Bitcoin as regulating the regulator. We've never solved that problem of who regulates the regulator, who regulates the countries, and to have this independent monetary system that contains trillions and trillions of values, which is where I'm forecasting this is going, is a force for people to be able to opt out of things that they no longer want to be forced into. And so for me, it's about creating that choice. And now we have a financial system that doesn't, to put context, you talked about the financial crisis. Take an example of the US. The US subprime market crash occurred because they were trying to find more and more retail people to get their debt in order to stimulate their money supply so that they could increase their economy and have more money. As a result of that, they went into about 2 trillion of debt after the bank crisis, bank bailouts, and trying to save the system. The crisis was caused because there was too debt in the economy, so they saved it by putting more debt into the economy. Fast forward 10 years, we now have $22 trillion of debt in the US. We've got 20 trillion more debt than we had during the financial crisis after the bailout. So, this is where we are today. And nothing, and if people believe in my philosophy that fixing the system means allowing people to own their money, spend their own money, and have a monetary policy that's based upon savings rather than debt, then we have to figure out how we're going to solve that $22 trillion hole. Allegedly, what I've seen is that the global debt is now a $240 trillion problem, and I don't think that even covers derivatives. So we are in unparalleled, uncharted territory where our system has to be fixed somehow. My guess about how we're going to do this from here is Bitcoin is too big to be taken down right now. They ignored it when it could be taken down, but I think it's too big, because if US decides let's make Bitcoin illegal, then all the innovation goes to another country and they get all the jobs and employment and growth that can come from that by supporting the businesses. But what I'm forecasting next is that we're going to have some trigger event. If somebody told you after the last financial crisis that this tiny little island of 200,000 people called Iceland would actually be the trigger of the global financial crisis, which it was, you get this tiny little weird thing that no one's really focused on, exposing this fragile system that came from the subprime crisis in America. Then you would have thought that's crazy. But I think there's just going to be one little niche, fragile user case, whether it's student loan debt crisis, whether it's credit card debt crisis, whether it's an obscure default by some strange country that investment banks have collateralized government loans to, and they default on their bonds and it crashes the entire system. Once that is exposed, you're going to have a domino effect like we've never seen before. 2008 was an example, but they solved it through bailouts, through bail-ins, and quantitative easing, which is taking the debt onto the central bank. This time, I don't think the public are going to have the appetite. I think there will be riots in the streets if the governments try to bail out again. I think there will be riots in the streets if the banks try to bail in again in a country bigger than Cyprus. And I think that quantitative easing is a failed experiment that the governments won't be able to sustain. So they have to find this $240 trillion of debt as a new way in a new money supply. My guess is that each of the central banks in the next financial crisis is going to allow the retail banks to go bust. The way they're going to do that, the reason they couldn't do that last time, because it's the end. You remember we said 97% of money is digital currency created by a bank. 97% of the money disappears if you let a bank go bust, which is an intolerable outcome for people's savings and people that have deposits. So the only choice was to try and bail them out and save them. But this time there's a new choice, and that is that central banks have realized, and every central bank that I've seen around the world, because of this thing called blockchain, where they're trying to copy Bitcoin and create their own version of Bitcoin for their own national fiat currency, they're going to create a digital representation of their currency, and it's going to be created by a central bank. What this means, it's a little bit confusing, but remember I said that 3% of the money is coins and cash and 97% digital currency created by a bank as debt? Well, if you let the bank go bust, you could replace that 97% with a central bank digital currency. And that's what I think they're exactly going to do. Every central bank is piloting right now their own central bank digital currency. What that means is the banks can now go bust. The problem is that your bank is going to be replaced by an account with a central bank. So what will happen is let's say you've got money at Chase Bank. Chase Bank goes bust. You then go to the central bank and it says, download this wallet and we'll give you the equivalent balance you had there with this digital wallet and this digital currency that we've created. Now, at least with the bank, you are one step removed from the government. Now you are completely in the financial system of the government, whereby if they think you owe them tax, they'll just take it out of your account. If they think you're spending money in the wrong way, they'll just switch off your passport and your account at the same time. And if they think, anything you're doing for that reason, and all of these, we're going to have mass bankruptcy of banks, but the central bank is going to take it on, and we're going to have a much more centralized, dominating world. At that point, people have choice. They can keep their traditional currency at a central bank, or they can take it, they can opt out of the system and go to Bitcoin. My hope is that enough people in this world do start preparing for that eventuality before it becomes a reality that they have to change. Because once it's at the central bank, once they wipe out the database of digital currency at the private banks and let them go bust, and replace it with a digital currency at the central bank, at that point, it might not be easy to get it into Bitcoin. My hope is that more and more people prepare for such a scenario, and they start educating them and getting into crypto, which is why I think things like Crypto Poco are such important things, and podcasts like this, because it's something that I think is inevitable, predictable, and guaranteed. Unless anyone on this podcast can tell me a better solution for how we're going to solve that $240 trillion of debt that has built up, then, and if your answer is communism, socialism, or anything like that, then prepare for a very different world. But if you want a free market solution, then you have the central bank currency competing with Bitcoin and other more decentralized currencies, and people have choice. That's where I hope we move.
Yeah, you know, for anybody that's listening, I think this is a gem for them to hear, because, you know, it is important. And, you know, I don't think that Simon's saying, you know, go and mortgage your house and buy, you know, Bitcoin. But I think what he's saying is, you know, start to prepare. You know, if you have, you know, 10% of your, you know, let's say your paycheck this week or this month available and free, you know, dabble in cryptocurrencies a little bit, you know, buy a little bit of Bitcoin, actually get into the usability of it, you know, download a wallet, learn what it's like to secure your cryptocurrencies. You know, there's a lot of factors to it, and you don't want to do that with a lot of money until you're really for sure that you have kind of all those processes down. So I think what's being said is, you know, buy some Bitcoin, buy some cryptocurrencies, invest in a little bit of the things that you're passionate about in this world, and you know, definitely get some experience with these things. And eventually, I think that once you try it, once you download some Bitcoin, once you transact in Bitcoin and buy something with Bitcoin or another digital cryptocurrency, I think you'll realize how powerful it is. I'll tell you, Simon, my very first transaction in 2015 was powerful for me. You know, I was at this networking event up in Tokyo, and I had heard of Bitcoin before, but I'd never bought any. I never got myself any. And one of the speakers at this event that I was at, he was a vapor, and at the time I owned a vape company, and his vape had broken. It was a, you know, about $100 vape setup. And, you know, I had a guy from my store come meet me at the conference, and I gave this speaker a whole vape setup, a new vape, a new tank, some juice, you know, all that kind of stuff. And, you know, so he said, okay, let me pay you for it. And I said, no, that's fine. You know, I own a store. It's no big deal. And he goes, well, do you have a Bitcoin wallet? And I was like, no, I don't. I mean, I've heard of it, but I haven't done it. He goes, download one right now. I'm going to pay you. I'm going to give you money in Bitcoin. I'm going to give you a half a Bitcoin for it. And so at the time, Bitcoin was $200. So you know, it was a $100 setup for the vape. Now, you know, that half a Bitcoin, which I still have, I didn't move it. You know, now it's worth, I don't know what, almost, let's say just under $2,000 right now. At one point it was worth 10 grand, most expensive vape setup ever. Yeah. But at that point is when I realized how powerful a transaction was, because it was instant. I mean, I had the money, it was there, I could use it, I could spend it if I want to. It was basically, the transaction was for free. That wasn't always the case, but it, you know, technology is getting better with Bitcoin, Lightning Network, and other, you know, different types of things are making it fast and cheap again. And hopefully the next influx of major participation into Bitcoin and other cryptocurrencies will be prepared for it to keep the transactions cheap. But really, you know, just to tell you that you guys and Simon as well, that it's powerful. And so you need to try and, you know, make a transaction and see what it's like. And I guarantee you, you'll want to participate more. I haven't met a single person that hasn't got more involved after they tried that.
Yeah, the only people that I think regret it are people that speculatively, you know, so I'm glad you made that distinction. I'm definitely not advising people to remortgage their house and buy Bitcoin. It would be an extremely reckless and irresponsible thing to. And at the end of the day, if the financial system collapses, you're probably going to have your house and your mortgage will be written off or something like that. I don't know. And that's why people in the current system are encouraged to take on debt, because they know the system's, you know, doomed. And something that they're probably preparing for that eventuality. It makes sense in fiat money to take on debt. It's the you know, the other one of savings, is just means that your fiat becomes worth less and less and less, and you have to work harder and harder over time, which is a very irresponsible message. But yeah, Bitcoin is still in the speculative stage. I believe eventually it will be a store of value, but I call it what's called a speculative store of value at the time, at the current time. The reason for that is because gold is a store of value. If you want to maintain, you know, the value of your money, while you will have fluctuations, it's still, gold has been a much better way of preserving wealth than dollars or traditional fiat money. Fiat money is much better short term because you can spend it. It's very convenient. You can pay your rent month to month. You can't really pay it in gold. I mean, you might have one of those gold money cards or something like that. But at the end of the day, cash, you know, fiat money is still the most convenient to use globally. Until it's not. But, you know, at the moment it still is. Now, Bitcoin is what I call a speculative store of value, in that I don't believe, because so many people still think it's a Ponzi scheme, a scam, and a currency just for drug dealers, and they're so skeptical about it, it creates a speculative opportunity for much, much higher growth in price. The day that Bitcoin, that everyone in the world just doesn't think that Bitcoin's a scam, a Ponzi scheme, or a currency for drug dealers, is the day that the price won't go up anymore. At that point, it will probably be, you know, a much more suited to be a medium of exchange and a unit of account, and people to start thinking in terms of Bitcoin. As humans, we can't think of my pint of milk costing me 0.012378654 Bitcoin. We just can't think that way. Our brains can only compute a couple of decimal places. And so it has its challenges. And my message is that I think the cycle of first getting into Bitcoin, to learning how to take care of your personal security to secure your own Bitcoin, to learning that you shouldn't leave them at exchanges and you should then have them on a hardware wallet, it is normally like a 1 to 2 year process for most people to get there. And so I think that more and more people should start that. I'm not saying it's a 1 to 2 year process for everyone. It's just different. You know, it's like when you first send your first email, it's pretty hard, but that's essentially what Bitcoin is. Once you know how to do it, it's very easy and it's much easier. But you just need to learn a few new things to do it. And you go through a cycle, which is you probably go to a company like Coinbase, and then you realize Coinbase is a bank and they can stop you from spending your Bitcoin because they're storing it for you. And then once it becomes worth enough, you realize, oh, I'm going to have to give them a load of data and to get it off. And then you try and get it on your own hardware wallet, and you go through this process of learning how to secure your own money. And then you realize you've got full responsibility of your own money. And that is a scary prospect for a lot of people because they like someone else taking care of their security a lot of the time. But you need to make that transition because that is the trend. The change is inevitable. It's just a question of when you're going to do it. Are you going to do that in a panic, in a rush, when the friction is very high? Or are you going to do it at your own pace before you need to do it? And unfortunately, the majority of the world will do it, you know, at the time when it's a panic and a disaster. But the more people that go out there and start getting into this and start the education curve before that, and then realize that they can generate wealth if they do this in a responsible way. Obviously, you still need to pay your rent, and Bitcoin is a useless way of month-to-month paying your rent because, you know, if some speculator or manipulator changes the price and you can't afford your rent, you know, that's a very, very hard thing for most people to manage. And most people can't be that speculative. But if you can take a portion of, think of it like, you know, taking a portion of your money, exiting out of the financial system where you can afford to lose it if everything goes wrong, but you're building this nest egg that if Bitcoin becomes what I believe it will be, then Bitcoin's either going to be worth like almost zero or orders of magnitudes greater than what it is right now. I know that depends on your time frame and when you're retiring and when you need to spend the money, and you need to think about your personal planning around it. But it's going to be a crying shame if Bitcoin does become what I think it can become, and so many people were just speculating short term or not thinking long term, and just not really using it for its full benefit. And that's what I think people should. It's a speculation that I think most people should be taking, if just not as a hedge or a insurance policy against the traditional financial system.
Yeah, you know, absolutely. You know, I kind of want to shift a little bit of gears here. You know, you are the founder and CEO of Bank to the Future. And so I was curious, like, what do you envision for the future of banking as it relates to everyday people with Bank to the Future? Like right now, as I see it, I've looked around, you know, on the site and stuff like that. And correct me if I'm wrong, but it seems to be only pertaining to high net worth individuals and accredited investors. And it seems like that's a regulatory aspect that, you know, your kind of hands are tied in that aspect some. But, you know, what would you say to someone who asked you about that? You know, as far as what do you see, what do you envision the future for Bank to the Future as it relates to kind of everyday people?
Yeah, so Bank to the Future is an online investment platform that allows people to invest in, equity in the future of finance. So companies that are building the future of finance. That's our niche. That's our vision. It was originally created because I wanted to invest in what I believed the future of finance was going to be taken. Every single aspect of finance was going to be taken over by financial technology companies. I just didn't know which ones were going to succeed. So I wanted to be diversified across lots of different companies so that some of them can fail and then a few of them do really well, was kind of the original vision, diversify into this. Now we have to comply with securities laws, and global securities laws say that this is a risky investment, and it is. They're right there. It's a really high risk, high return investment class. And the way that regulations deal with that is they say only allow people that can afford to lose it to invest in ultra speculative things. Now, you can take two ways of that, and I'm not really here to give my political belief about it, but either you believe that they're enriching the wealthy and they're saving all the best opportunities for the wealthy, and there's no doubt about it that many people got incredibly wealthy during the ICO boom because they were allowed to invest in ultra speculative things, and it changed their life forever. Others got really burnt by that. And then what do? They go and cry and complain to regulators and say, why did you let this happen? So regulations tends to be consumer driven, where these retail people that complain that they're not allowed to invest in something, when it goes wrong, they complain to the regulator and say, why didn't you protect me? It's self-enforced, and you might not be doing that at the individual level, but that's what's happening at the macro level. They want a one-way bet. And so regulators have just decided you can take the theory that regulators are enriching the rich and the rich are going to get richer, or you can take the theory that they're trying to protect the consumers as all the consumers are complaining when they lose money. Whichever one you want, take it, but that's the securities laws. We have to comply with securities laws. We will let anyone that is allowed to invest, but we have to comply with global securities laws all around the world. It's restricted to people where it's compliant to be able to invest in your country. And each country has a very different take or stance on who that is and what it can be. On that as well, I would say it's probably not the place that you wanted to start investing. I would say that if you're going to start investing, then I think your first place, if you're not wealthy already, is probably to figure out how much money you can speculate and afford to lose on something like Bitcoin. And then once you've got Bitcoin, you then might decide to get a bit more speculative with it and invest in really high risk, high return things like alternative things. And there's lots of opportunities that came from it. And then once you've generated wealth, I would say investing in equity or some of the opportunities on Bank to the Future might be more appropriate. I can't give financial advice, but I would say that's a reasonable approach and strategy that people would follow if they wanted to invest in this industry. We don't want to be, we are a very high risk, high return type of investment opportunity. And securities laws say that only certain types of people can do that. And so I don't think it would be the first place you would invest in this industry anyway. So that's our take on it. But yeah, what Bank to the Future is essentially a way to invest in ultra high return, high risk opportunities that are building the future of finance. And it tends to be a binary bet. The company either goes bust, or it kind of floats in the middle, or it becomes a very, very successful company with ultra high return.
So you guys focus, specifically on fintech and disruption in the financial sector?
Yeah, so we originally wanted to allow people to invest in anything private equity, but then as Bitcoin succeeded, as we got more and more in this industry, we just decided to focus just on financial technology so that we can, in our own way, with each funding round, invest in something that disrupts traditional finance so that we can facilitate this movement and shift from a few banks controlling everything to lots and lots of companies having lots and lots of niches, giving more and more choice for consumers. And if those companies do succeed, then the investors through our platform benefit from the upside and the equity.
Well, I hope to be able to be one of the high net worth individuals that is able to invest in some stuff you guys are doing. I seen that, you guys basically, once you put an opportunity up there, it sells out really fast. And I seen how you guys have created your own token to facilitate the ability for people to get that token, which gives them sort of a first mover advantage or something like that. So if people have the tokens, they might be able to get the information that there's a new investment opportunity coming up. Could you talk just a little bit about that? So for people that are listening that are high net worth individuals that do want to participate in investments in Bank to the Future, could you give a little insight into how that goes?
Yeah, so this is a really interesting part of the crypto space that I think a lot of people have got really confused by. Firstly, I believe that Bitcoin is our world's best shot at sound money. But at the same time, Ethereum came along and created something very different. It's not a fixed money supply. It's not found money by any stretch of the imagination. But many people thought that Ethereum was competing with Bitcoin. But Ethereum ended up creating disruption in capital markets by allowing people to create tokens. And therefore, those tokens can be distributed globally in a very convenient fashion via those in the crypto industry. And Ethereum created an opportunity for everyone to create their own little networks. And then we had this thing called an ICO boom, where people were creating those tokens in order to raise funding outside of regulation. And then regulation said these are securities, and then clamped it down and turned it back into all the securities laws and regulations. But it created a really interesting opportunity, and that is that people think that when you're creating a token, you're trying to compete with Bitcoin or something like that. The Bank to the Future token has got nothing to do with Bitcoin other than you can buy it with Bitcoin. The Bank to the Future token is a token that we created for our members to solve a few problems on our platform. The first was we wanted to incentivize people that perform due diligence, investor relations, and helped our investors get more information about the deals on our platform. And having your own token is a great way of rewarding people. They accumulate that token, and if the network effect of that token succeeds, then they benefit from that as well. We also wanted a way to give priority access to investors. So those that hold tokens on the Bank to the Future platform, then if they have 10,000 tokens and have an account, they get priority access to deals and they get to see them first. The other thing we're doing is we just launched our secondary market. And what that means is that the people that bought the shares can sell them to another investor on the platform. And therefore, there's a sort of marketplace where people can buy and sell from each other, and they can speculate rather than waiting for the company to go public or float on a stock market. But if they pay those fees with the Bank to the Future token, then they get a 50% discount on those fees, and we get to reward people that are supporting the network, and they get a discount on those trading fees. And so you create the Bank to the Future token is a network that really just supports the ecosystem we created at BnkToTheFuture.com, and it's on cryptocurrency exchanges, and you can buy it like it's not a cryptocurrency, it's a token, but it performs and acts, and you can do anything that you can do with another one. But have it be clear, I'm not saying that this is nothing like Bitcoin in terms of trying to become sound money or something like that. It's a very different proposition.
Okay, well, I think that gives everyone some good insight. I think there's a ton of information in this interview, so I really appreciate your time today. Is there anything else you would like to let our audience know before we finish?
Yeah, I mean, I think we've covered it. I think I just want to, really just reiterate the importance of education like this. I really appreciate content creators like you that are actually going out there and, conferences like Crypto Poco and Marco Poco. They're actually going out there and teaching people alternative perspectives, and the people that are taking the time out to actually learn this stuff. It's really important to be prepared and understand this industry. I believe today we're in the most exciting time in financial history we've ever seen. There's going to be huge winners and huge losers, and you've got to decide what side of the fence that you're on. The fence that most people will be on is doing nothing. And I want you to understand that when you're doing nothing, you are speculating on the property market and fiat money. By doing nothing, you are relying upon the government continually increasing the price of property to perpetuate the debt markets of fiat currency. And that is a speculation. If you hold your money in a bank, that is a speculation on the credit risk of that bank and that bank being there and them giving you your money back. And if you're doing nothing, you are speculating on those things. Once you understand that, then you can choose how you want to speculate. But just understand that we have no choice of non-speculation anymore. That world is over. We're all speculating. We're either speculating on something, and you need to choose consciously, or you need to have made that decision be made for you by the financial system that may not have your best interest.
Well, that's such an awesome perspective, Simon. You know, and it's true. You know, it's you know, more utility, the more use there is for, you know, as the technology improves, gives, you know, better and better reasons. But as that happens, you know, and more people get involved, the people that got involved earlier are always going to benefit more. So it's in your best interest to, you know, like you said, start to dabble in right now and get, you know, get your head around this new industry and to decide what you want to speculate on. Thanks so much for Simon, for taking the time to educate us on these matters, which are so important. It's been a real pleasure. Too bad you couldn't make Mexico this year, because I would really like to meet you there, but maybe I'll catch you on the next one. And, you know, it's been a real pleasure.
Okay, great. Yeah, it's going to be a great conference. I wish I could be there. I'll be there next year.
All right, guys, be sure to check out Simon's social links to learn more about Simon and what he has going on. And if you want to learn more about Bank to the Future, that's Bank with BNK. Leave out the A, BnkToTheFuture.com. Also, we have created an upcoming events page at the top nav bar of cryptodaily.co.uk. Be sure to check out our website for more information and to follow our other interviews and stories. And if you want to attend Crypto Poco /Anarcho next month, there are still a few tickets available. I have worked it out with them to give you a 10% discount off your tickets. I'll include a link to that below as well. And if you purchase via that link, you'll get 10% off the ticket price. As always, if you like this episode, give it a like, subscribe, and share it with others, and hit that notification bell for future videos and interviews. Thanks for watching, and see you on the next one.